Welcome back. Markets holding up quite fine and steady, and there's been good news trickling in for a lot of the PSU banks as well, particularly the ones which are within the PCA framework, because we do understand that additional recapitalization money will start trickling in. Let's go across to Lata to understand the math and the details. Lata, do run us through this.
Still sourced information, but we are given to understand 28,000 crores of the overall 83,000 crores that is budgeted is going to come today itself. And of that, a lion's share, one-third or even more, is going to Bank of India, 10,086 crores, we understand. I'll just run you through all the numbers. Bank of Maharashtra, 4,498. That's almost 4,500 crore. Oriental Bank of Commerce, 5,500 crores. UCO, 3,000 odd. Central Bank, 1,600 odd. United, another 2,150. And Syndicate, about 1,600 crores. Now, we only concentrate on Bank of India, Bank of Maharashtra and OBC because it appears when you do the math, they look best placed to come out of the prompt corrective action straitjacket. At least two filters they may satisfy. The first of them would be the CET, that is the common equity, the actual shareholder equity. That was for Bank of Maharashtra 5.9, it comes to 7.8 if this entire money goes, which it will, if the source is right. Oriental Bank of Commerce, the CET1 goes from 3.9 to 7.17. Bank of India goes up from 3.29 to 7.53, and so on and so forth. The important point is these guys go above that 6% CET mark, plus that capital can be used to provide for more loans. So the net NPA comes down, and therefore let's come to the net NPA list. You will notice that Bank of India, Bank of Maharashtra and Oriental Bank of Commerce are already like 10 or below 10. So with this kind of capital, it's possible that they will move towards the 6% mark. I think Bank of India will definitely move under 6%. That is the RBI's second filter. You ought to have CET1 above 6 and you ought to have net NPA below 6%. So these three banks have the best chance to move towards that 6% mark. The only other filter that will not be satisfied is that they have to become ROA positive for 2 consecutive years. Or rather, they should not be ROA negative for 2 years. That is, should not be making losses for 2 consecutive years. That will take a while. I mean, they will make their profit only now after the 4th quarter. But chances are the Reserve Bank may agree to remove or dilute that filter if they show enough promise that they will come out of negative ROA. So it's possible that when the Board of Financial Supervision of the Reserve Bank meets and decides the new criteria, these banks may well set to come out of the prompt corrective action list. That's Bank of India, Oriental Bank and Bank of Maharashtra. But again, it's not immediate. The rule has to change. It is quite possible that the Reserve Bank also waits for the 3rd quarter numbers, in which case it may be even 3 weeks from now or 4 weeks from now. But it's imminent, so it seems.
Okay, so just to clarify, Lata, if it wasn't for this bank recapitalization which came through for these banks under PCA, they wouldn't have exited.
You know, that is the whole point that the Reserve Bank was making, right, that there is no issue at all to allow banks, provided shareholder brings capital. You know, would you have allowed a private sector bank with 3% CET to even lend? You would have actually merged them with somebody. In no country in the world, a CET 3% CET will be allowed to lend and accept deposits. Because there is sovereign guarantee, they are allowed, and because the law doesn't allow them to be forcibly merged with anybody. The regulator doesn't have the power. Once the capital comes, there's no issue. Then you make a loss and the shareholder puts in that much capital, then you're kosher.
Then you could carry on. One more point, Lata, I mean, aside of the bank recap issue, we heard of this big meeting between representatives of the NBFC sector and the Prime Minister. And it's interesting because they seem to be asking for a special line of credit, whereas a lot of the market participants have been telling us that the problem is more or less has been resolved within the market itself. So your thoughts?
Oh, you put your finger on it. The Reserve Bank's move has been that you provide adequate capital to the banking system. And the banks and the market will give money to those who deserve it. And therefore, the deserved will come out. Those who don't have a liquidity problem, but an asset quality problem, ought not to get easy money. And that's why they've maintained the principle of easy liquidity. And we had Mr. Rasesh Shah and several others, even Kiki Mistry, tell us that now there is no liquidity problem. I mean, the problem is resolved. So this clearly is like Oliver Twist. People will always want more. And there are a bunch of NBFCs, HFCs who have asked for this special line of credit. The Reserve Bank has so far resisted it. But you will have to wait and see as you get near polls. Governments also panic and worry that people will be laid off from construction and things like that. And the construction sector is the biggest employment sector. As it is, there is an accusation of poor job creation. So there may be pressure, and you don't know at what all points the Reserve Bank will yield. I mean, this is what they would resist maximum, this special line of credit. But let's see how things go.
Okay, all right, Lata. Thanks very much for that. In fact, a field day for a lot of these banks that we mentioned. For example, Bank of Maharashtra, high point of the day, UCO Bank buzzing around, and a couple of these NBFCs also doing well. Indiabulls Housing Finance, for example, case in point, is up around 1.3%. We'll do one thing, we'll take a break, but up next, we're going to discuss the outlook for crude going into 2019. Virendra Chauhan of Energy Aspects will join in, and we'll get you your usual commodity strategies as well. Kunal Shah of Nirmal Bang Commodities will be with us.